Hey everyone, this is Kirk here again at optionalpha.com, where we show you how to make smarter trades. And in today's video, I want to go over how you can make adjustments to iron condor positions. So unfortunately, even when we place neutral strategies in the market, stocks will sometimes move outside our high probability of success boundaries and we'll have an opportunity to lose some money. And this will inevitably happen with any system where you're trading high probability trades. You can't win every single trade. So the first thing we have to recognize, though, is that when this happens, we are now playing defense. And the number one goal is to reduce risk first. So your goal when making an adjustment to an iron condor is, how can I reduce the amount of loss that I have should the stock remain outside of those boundaries? But remember that you don't have to make adjustments to these trades to still make money. And this is so important with iron condor trades. So long as you place them consistently in small amounts, meaning small trade sizes, and you're on the right side of implied volatility, meaning you're not trading these when implied volatility is low, you're trading these when implied volatility is really high, you'll still be fine and you'll make money. So making an adjustment to an iron condor is not a requirement. It does help long term to make adjustments to iron condors and to make them in the fashion that we're going to go over here in a couple minutes, but you don't have to do it. So if you're a little bit more passive, a little bit more conservative, this is not a requirement to be successful. It just means that you're going to make a little bit more money than you would have if you didn't make adjustments. So the first thing that we're going to do when an iron condor gets challenged, and let's say that we get challenged to the top side, so the stock starts moving higher against our position. First thing that we're going to do is the challenge side we do not touch. So in this case, the call spread that the stock market is moving towards, we leave alone. We don't roll up that side. And we've gone over this in a bunch of other video tutorials. But the reason that we don't do that is because we're guaranteeing a loss if we roll up that side by closing out the trade when it's already losing. Plus, we roll up that side to another higher strike price. Who's to say that the market can't continue to move higher? And again, it creates this compounding effect where you just continue to lose money hand over fist. So what we do is instead we move the unchallenged or untested side closer to the new stock price and take in a big credit. This also helps widen our break-even points and reduce risk overall. So let's actually look at an example here on our broker platform with Thinkorswim. And you can see we're currently looking at IWM, which is the Russell ETF. And it closed today at about 118.12, so just over 118. Now, a very typical iron condor trade that we would make is about 56 days out right now, which is March, and we're selling the 106-105 put spread, which has about a 15%, 16% probability of being in the money, and we're replicating that same probability on the top side of the market with a 125-126 call spread. So you can see we're doing this very even and balanced as far as probabilities go. We want our probability of success to be about the same on each end. So we're selling the options that are about the 15, 16 delta on either end. For doing this, we take in a nice credit of about $30 on a 1-point wide iron condor. So our risk profile looks like this for IWM. You can see it's a very normal iron condor profile. Now let's say that IWM, which is currently trading right about here at 118, starts to really challenge the top side of our trade. So it starts to really move higher. And you can see our break-even point right now is right at about 125.30 or so. And so if this stock starts to move higher, then we get challenged on this end and we potentially could lose about $70 on this trade just to make $30. So what we want to do is we want to first reduce risk, and we're going to do that by sliding up and rolling up this side of the trade. So we're going to roll up this put spread to something a little bit closer to where the stock market is currently. We create a more narrow, taller iron condor that takes advantage of this. So what we're going to do here is we're just going to assume that the market has already moved higher. And what we're going to do is roll up to somewhere around maybe the 114, 113 put spread below the market. Okay, so we're going to go ahead and just roll up that side of the trade. And once we take off the position below the market that we originally had, so we're just left with this other position here, which is that vertical. And let me just recreate that vertical spread that we had sold above the market. Now what we're left with is an iron condor that looks like this. Again, much more narrow at the top, much more balanced. And that additional credit that we took in helps reduce the overall loss on the trade and moves our break-even points out further. So you can see our original Iron Condor had a break-even point that was much further away from where the stock is trading right now. And so what we're going to do is we're going to slide that put side in closer to the market and take in a very big credit, which helps reduce our loss if we keep the width of the strikes and the number of contracts the same, but also it increases our chance of success because it widens the break-even points by the credit that we receive. So again, by doing this type of adjustment where you're sliding the unchallenged side higher or lower if the market's moving against you, this creates a taller, more narrow Iron Condor that both reduces overall risk because of the credit that you're taking in and widens your break-even points to the side of the market the market is challenging. And again, this increases your chance of success because if the market can then come back into those break-even points, you have an opportunity to make some money. So as always, I hope you guys really enjoy these videos. If you have any comments or questions, please ask them right below in the video lesson page. And until next time, happy trading.